Hey guys, Doug the Retirement Guy here. We have three BDC companies that pay a 15% dividend average that you should have in your retirement account. In today's times of the stock market going up and down, and we're seeing that the future is in financial services, we wanted to give you something that could help you down the road that will give you growth and a steady income and a secured income in today's troubling times. Let's get into today's video. First question is, what is a BBC? Well, it's a business development company. It's a closed-end investment company that provides capital to small and medium-sized private companies. So they're basically like a bank for corporations. BDCs are similar to private equity funds, but are publicly traded. Financial source, the BDCs act as a source of capital for small businesses that struggle to secure funding from traditional lenders. They pay out their dividends. BDCs are required to distribute a significant portion of their investment earnings to shareholders in forms of dividends, which are typically reported on a 1099. When they do that, they get a full tax advantage. The BDCs are offered certain tax advantages that are exempt from many of the regulatory constraints imposed. So the advantage is to keep their dividends up and high and paying accordingly. Now, BDCs typically invest in private U.S.-based companies, but also may invest in companies with a market capitalization below a certain threshold. So they're pretty wide open to who they're going to invest to, but there's reason and restrictions why that makes BDCs a very investment for you. As we all know, the goal of adding to the retirement account is we want investments to grow. We want income from our investments so that we can live. And we want to be relaxed and worry-free with our changes and with our investments. So our best BDC picks that we have found in our research so far, our number one is going to have a 9% upside, a 15.7% yield, and it pays monthly. Our second one will have a 12% upside, paying a 15.10% yield, and pays monthly. And our third and final one has a 5% plus side, but pays a 15.07% yield. And again, that pays monthly. And you know on this channel, we love the monthly paying dividends because you get to pay your bills. You get to do everything you want to do every month. So that gives us an average of 8% growth potential in our fund today and a 15.29% average yield. So in 12 months, we could actually have a 23% growth in our account with these BDCs. So basically what it says, now we're not going to take all of our money and pour it into this, but what we're going to do is build inside of our retirement fund a BDC classification, which is our financial leg of our retirement fund. So as financial services business grows and does more, this leg will grow and does more, just like you have one for technology, consumers, and so on. So in the investment fund, we're going to put $100,000 into this, which means we should see a $3,000 growth in the very first BDC we have, but gives us a $5,233 income that's paid. Again, we're going to say it's paying monthly. The next one will be a $4,000 growth with a yearly payment of $5,033. And our third BDC has only a $1,666 growth, but it maintains that $5,023 income. So it makes for a very, very solid, strong paying out program, which gives us about an 8.6% or $8,600 growth and $15,290 of added income from the $100,000 or 15.29%. Our first BDC is Horizon Technology Financial Corporation Common Stock HRZN. Now the bar graph that we put on this, and you can see we did this April 15th, but what we wanted to show you is this thing is well over 13 years of pattern. So you can see this thing pretty much holds at the start, about a $15 price point, drops just a hair below, and when we get into that 2016 market, has a slight drop, then continuously holds at this mark, then has a drop for COVID, and came out of COVID very, very strong. It has basically went back to its normal level until we get into the tariff fights and so on. So now you can see the drop off at the end. So what it tells you is that this is normally a very, very steady, slow moving, consistent stock. The average price over the period is $12.69. Now we did this average over the last 5 years. So if we take back all the way just basically before, right after COVID, you will see that this stock is $12.69. The current price of $8.44 gives you a $4 buffer to get back to the average. That's huge. The other thing that the stocks, and this is why you see the stocks don't grow as big, but the price to earnings is only 6.32 when the industry is at 17.2. So they're not giving it its full price to earnings ratio because these guys are cranking out the dividends. They're paying their dividends that they want to make sure that they have the high dividends that they can pay it accordingly. So when we get the ratings, this is the one that really tells me is okay, we're doing good. They get an A+ in dividend safety. Okay, they mean this thing is very stable. They show that they have the 10% growth in EPS. The growth is a very stable dividend security. They're looking at a 16.06 forward dividend yield. It's in the top 15 of BDCs of yield, so again, you're getting an A+ rating there. The return risk, A+, 1.5 short interest, low. This means most of their stuff is locked in for either a higher interest rate or long-term development. And then here we go with the return potential. 9% targeted upside is what they're looking at. Now it's in the middle, 20%. Okay, because we don't expect this one to be a rocket and going crazy because we go all the way back to dividend safety. We go all the way back to the yield. Everything stays where it's at, but we're looking at a positive 9% growth in horizon. And I look and agree with it because I think that's actually probably a little bit low. But when you're looking at all, I'm looking for a $4 gain in the stock price to get me back to my average price. So this is our number one choice. Strong, strong fund. And we'll move on. Our second BDC. Now, you've probably heard of us talk about this one, but it's the PNNT Park Investment Corp, PNNT. Again, we give you the long track history. This one's probably over 16 years. And you can see it had at the beginning, it was a little bit of a roller coaster, found its stabilization, a little drop between that 16 until we get to the COVID, which everyone has that major drop. But coming out of COVID, you look at PNNT is kind of pull itself right back to where it's always been. Even with the drop off in this past tariff attacks, we have dialed in and they've recovered strongly. The average price over the past 5 years of this one is $6.11. The current price is $6.39. So you'd actually say, hey, this is probably, you're not going to get much growth out of this one. But the whole point of this one is it's back to where it was. It never got affected by the tariffs. It's dialed itself in to be very, very secure. Again, price to earnings ratio, 7.96 when the industry is at 17.2. So again, it's underrated in value. We go over the dividend safety, A+. Okay, they have a 3% growth, very, very stable. Their yield, they're looking at 15.51 forward dividend yield, another A plus, top 15. And their price swing, this is the one that just, again, A for risk is A across the board. So again, very, very strong hitter is that they're not getting the price swings that we talked about earlier. Now, the return potential, they're looking at a growth. This fund is going to grow its dividends, and it's in the top 20% for growth of dividends. So again, as we talked, this may not be the fund that jumps out of craziness, but it's a steady performer, giving you steady funds and growth in your dividend. Our final BDC is Prospect Capital Corporation, PSEC. Now, this fund, again, you look at these things. These things have been going on for a long, long time, guys. This one, we got ourselves probably almost 16, 17 years to give you a track history. This one started again. They all start off about $15, and then they either spike down or spike up. This one spikes up and then finds its natural pattern all the way through. It had a slight drop off at the COVID period, but it's been, as everyone will say now, looking at the chart, you've seen we got a steady run to the bottom. The average price was $6.43, and the current price is $3.58. This one, at first, I was like, man, I don't know if this is going to be a great one to have in the portfolio. I don't know if this is one's going to perform or we're going to race to the bottom. But when I start putting everything together, their earnings ratio is 6.71 to an industry 17.2. But when I looked at dividend safety, it's got a 1% growth, A plus rating, and they say it very, very stable. A plus in yield, 15.17 forward dividend yield, top 15%. The risk, 0.8 beta. So they're saying the pricing direction swings are not there. And we look at the line, and I'm like, yeah, they're right. We're not seeing swings up or down any which way. But I still say we got that falling factor that's scaring me. Till they come back, it says it's a B rating. It's the first B that we had in the entire program, but they say a 12% target upside. And they're in the middle 20% of the category. And they're saying this is going to have that 12% growth. Well, again, 12% is basically about a 40-cent gain in price. But when the average was $6.43, all we need is that dollar gain, and we're making big numbers. So a summary of our BDC retirement account. Investment growth. Well, we got a solid 8%. You look back at everything that we talked about, every one of them has had a potential growth coming in line. Income investment, 15%. A plus rating across the board of all three funds. A plus, stable, regular payments, no issue on that one. And is it relaxing and worry-free? Well, let's take $100,000. You're going to get $15,290 in income that's going to be paid on a monthly basis to you. So if something does fluctuate, you can make your adjustments, make your changes. So it is very worry-free and very easy to go. Guys, this is Doug, Retirement Guy. If you like what you're seeing, give us a thumbs up. Hit that subscribe button. Don't miss any of our other videos. And leave any comments. If you like or dislike what I just put in there, go ahead, put it out there. We're here to answer all your questions. Thanks. We'll see you next time.